Hello everybody, welcome to the next episode of Taxman's Tidbits. I hope everybody's doing really well today. The topic I want to address today is incorporation. I get this question all the time. I've got real estate, should I incorporate a company to hold the real estate? What are the advantages, what are the disadvantages, and so forth. I'll be honest, this topic is really much more elaborate than a 10-minute little video can address properly. So what we're going to do is I'm going to, in a multi-part series, deep dive into this to really try to address the major issues. What I'm going to do right now is I'm just going to highlight the points that we'll probably discuss over the next few videos. And then I'm going to deep dive into maybe one or two of them today, trying to keep the time to around 10 minutes so that you can quickly watch this and it doesn't become very time consuming. So when we're dealing with incorporation, we've got a lot of issues that we can address. First of all, there's the legal issues of, from a liability perspective, do I want to incorporate? You've also got tax issues in the sense that am I actually going to save any income tax by having my rental property in an incorporation versus holding it personally? Then you've got issues of, well, am I going to have to pay transfer tax, welcome tax, in and out of the corporation, and so forth? And if I try to sell that corporation afterwards with the property into it, will transfer tax apply, mutation tax? Then I've got non-resident issues, whereby if somebody's a non-resident, is it advantageous for them to hold real estate within a corporation, incorporated in Quebec or in Canada, or to hold it personally, especially if it's going to be for rental purposes? Then we have transfer of rollover issues. So you already own the property, you bought it, this year, last year, 5, 10 years ago, and you're saying, can I now transfer it into a corporation because it makes sense, or your tax advisor is advising you that it makes sense for you? Is it a good idea to have a corporation if I may want to add people onto the ownership? Meaning I've got a property, maybe it's myself, maybe it's two people, we want to add partners, we want to grow. Is it better if I have a corporation to do that? There's what is your personal issue, meaning, are you getting family allowance? Is that family allowance going to be affected by rental income that's being declared in your name and so forth? So as you can see, there are many, many, many issues that you have to consider. So ever you come across somebody that says, oh, you have to incorporate, you know right away that that person really doesn't understand the issues. No two clients are the same. What may work for one client may be the worst thing for the other client. So I'm going to give you an example of something here that's important. So we'll start with legal issues, which is probably the one that's thrown out the most often as the reason to incorporate real estate. But in my opinion, more often than not, is the least important reason that we should incorporate. So legal issues are, well, I don't want to get sued. I want to protect myself, and therefore I'll own it in a corporation, and that corporation will protect my assets from lawsuit. Sounds great. But the reality is, what is the likelihood that you're going to be sued because you own a duplex, a triplex, a condo? You have insurance for this, especially in the province of Quebec. We buy insurance, we have liability insurance, oftentimes it's $1 million, $2 million. Is it really likely that something so dramatic is going to happen that you will be sued personally because you're the owner of a rental property? I mean, I'll let the lawyers really opine on this, but my experience in over 23 years is I've never seen a case where somebody was sued to such an extent that they would have had to incorporate to protect themselves. That doesn't mean that there are no situations where incorporating for liability purposes is unwarranted. No, I have a lot of situations where we incorporate for liability purposes, but not in the example that I just gave. So if you're buying a duplex or a triplex and you're saying I'm going to incorporate to protect myself from lawsuits, it's unlikely that you're going to have to do that. But let me give you an example where it's a very good idea. So let's just say, you're a smaller time investor and you've been buying condos or duplexes or triplexes, and you've got a good experience, and then the deal of a lifetime pops in where you're going to buy a 30plex, a 50plex, or more. Now you're a little bit out of your comfort zone, but it seems like a good deal. The math works. You've worked through everything, and you're asking yourself, should I buy this? Okay. Yes, I want to buy it. I think I'm going to make a lot of money. Should I have it in a corporation? Well, the issue here is not so much are you going to be sued if there's a problem. I mean, you're going to do your environmental test. You're going to make sure you don't have, asbestos or anything like that, that people could be sick. There's ways to protect against that. But the real risk here is a financial risk. What if this thing goes belly up? What if when you suddenly got into this huge thing, you realized you don't really have the time, the capacity, and the market's changed, and you know you got a big problem because you got a huge deficit, and the bank's basically going to force you to pay. Well, the reality is, if you own that property in a corporation, and if you structured it properly, you might be able to walk away from this property only losing your down payment, which is not good, but it's much better than losing everything. But the practicality of this is the bank is most likely going to make you as a personal guarantor of the mortgage, even if you have it in a corporation. So you really need to be quite savvy. You need to structure it properly, and that's where having somebody on your team that could structure this from a financial perspective makes sense. I'll give you an example. If rather than going to the first market for loans, you decide to go to the secondary market, and you're paying a premium on the secondary market because there's higher risk, but you don't need to give a personal guarantee, sometimes it makes sense. Of course, it's a numbers thing. So if instead of paying, for example, 3.5%, you'd have to pay 8.5%, 5% is a lot of money, but if that means you don't have to give a personal guarantee and you're not sure if this thing is going to really work out, that could be something. I often work with clients dealing exactly with the situation, and I'm able to assess for them if the additional costs are really warranted in terms of the profitability. So I just want to leave you with that. Another thing I wanted to discuss is just really briefly for those of you who are real estate agents, brokers, and are dealing with non-residents who are buying properties in Montreal or anywhere in Canada for that matter to rent out. We do a lot of these files every year, and the reality is there's special rules under Part 13 of the Income Tax Act which deals with withholding tax and reporting and all kinds of requirements that if they're not done properly, there's significant tax to pay. So the purpose of this class is not to really get into those issues, because I can do that as a separate video, and if anybody's interested and would like to really understand how non-residents are taxed when they acquire rental properties, it'd be my pleasure to do that. We do 30 files a year of these. But getting back to the idea of incorporation, by incorporating a company in Quebec, a Quebec Inc., you don't need to have a resident director, which means a non-resident who incorporates a company to own real estate, to rent it out, can be the director of that company, even though they don't live here. And by having a Quebec Inc., that corporation is considered a resident corporation of Canada and bypasses all of the Part 13 tax rules. That means no withholding taxes, no NR6s, no NR4s, no tax returns under Part 216 for the Tax Act, and on and on. So that's a situation where it would make a lot of sense for that person to consider incorporation, but once again, we got to factor the practicality. If they're buying a little condo and now they've got to produce financial statements, corporate tax returns, and the cost will be more than if they just had to file a personal tax return, it may just make more sense for them to file that personal tax return, even with the added burdens of all of the reporting, because they're going to save enough money and the property that they're buying is really not warranted. On the other hand, if they're buying a fiveplex, I would right away and say more often than not an incorporation makes great sense for them. Another situation I'm just going to discuss right now is a situation where somebody, for whatever reason, needs to show lower personal income tax, meaning their income that they're declaring for either they're getting family allowances or child care benefits or whatever, they should not show much income on their tax return. So in that case, having an incorporation makes a lot of sense, because that income is taxed at the corporate level, and as long as they don't draw that income out of the corporation into their own tax return, they don't declare that income, and it does not affect all of these benefits. Just as a quick offshoot, CERB was one of these situations where, in my opinion, it was an ill-advised program, the way it was structured, because one, it did not factor in what people declared prior to COVID, and also, a situation like this, you could technically have $25 million of real estate in a corporation and still collect CERB, which seems nonsensical because I think the idea of the CERB was to help the people that were really in need, but those who knew how to work the system could structure things to get the money from the government, yet continue to generate income within their corporate structure. So again, as I'm saying, there's never a right answer for anybody in terms of incorporation. It's just what is right for you. And that's why I always advise individuals to go seek professional help. Talk to a tax specialist before you do something to make sure that whatever costs you're going to incur makes sense in light of the big picture. Other issues we'll discuss in the next part is I'll go through the other issues, the tax issues, the transfers and how it works, and if you want to bring on partners and what's better and what's the difference between a partnership and a co-ownership, because it's not the same thing fiscally, it's not the same thing in terms of accounting, and yet people seem to mix up partnerships and co-ownerships all the time. And everybody says, I have a partner in my building. No, you don't have a partner unless you have a partnership agreement. You have a co-ownership, which is treated somewhat differently. So I'm going to wish everybody a great day. I'm hoping this is something of interest. Please leave some comments or some likes. If this is a topic you want me to continue, I'm thinking we can do a 3 or 4 part series on this. And again, if there are topics that you want to know about, feel free to message me. If enough people message me for the same topic, it'll be my pleasure to introduce a video. And if you have a particular situation that you like confirmation or some sort of review of, send me a messenger request, and we can obviously talk about that and see if we can help you out in that as well. So I wish everybody a fantastic day, and good luck.